Hi, this is Jeffrey Cohen. Welcome to my broadcast. It's week 23. So we're here with, I'm Jeffrey Cohen, President of Chicago Quantum. Let's talk about the markets. Let's talk about what's going on. So, big news this week. It's Consumer Price Index. So, what happened there was that prices are up dramatically, like crazy up. Over the past 12 months, the all items index is up 5%. And so I would expect to see the financial pundits going crazy. Oh, sky's falling, Rome is burning. And so we took a look at the numbers and we're not quite as worried. So it's true that all items, this is by the way BLS, Bureau of Labor Statistics, government website. By the way, great job for the BLS. Food's up 2.2% for 12 months. So I get it. Food's more expensive by 2%. Totally makes sense. Energy, on the other hand, is up 28.5%. If you notice when you went to the pump, the gasoline looks more expensive. It's 56% higher. So I'd like you to think for a minute. We canceled the XL pipeline because our government didn't want access to Canadian crude oil that we would then refine into gasoline. We had a pipeline failure with Colonial Pipeline where the hackers came in. But really what's happening is you have New Mexico with regulations on that they want to pass on drilling in the Permian. You've just got a culture that says right now oil and gas is bad. Let's invest in wind and solar. If I remember President Bush, switchgrass and ethanol. And why don't we just all get on exercise bikes and produce some electricity that way? I don't know. But with every time we plug a car into the grid, we pull electricity out. So we need energy, right? We need oil and gas. And so I look at this. So I'm thinking a lot of the rise in prices is going to be based on secondary effects from the price of energy. To be honest, I don't understand, right? So I love it. I was invested in oil and gas stocks. I'm not anymore. Price of gas and oil goes up and these companies do great, right? But really what should happen is we should be producing a lot of oil and gas. No part of the world should have a monopoly like the Middle East used to. And so we just produce what we need and we make money at it. And we don't try to drive the price up. So if any policy makers are listening, gasoline up 56%, that's a lot of voters who go to the pump. I just went to the pump. My wallet's a little thinner now because of oil and gas. So that's my headline. By the way, there's a few more headlines here. Used cars and trucks. So another thing we did is we made it risky to build new chip fabrication facilities. They're really expensive. They cost well over $1 billion for one factory. So you think, well, whatever, just build one, right? And take all the research and development risk, make the chips better, smaller, denser, faster, follow Moore's law. Guys, you got this. Intel, all the others, just AMD, get out to NVIDIA, make some chips, right? Well, the problem is that we're raising taxes, right? Corporate taxes. And we're coming back to increasing regulations. And I think people knew with the new administration, which, by the way, it's fine. It's a fine administration. But they're not quite as friendly. So now it's funny that they're talking about adding, $50 billion. They're talking about just throwing it at the semiconductor industry. But really the price of new vehicles is up 3.3% because thank you Ford, Chrysler, General Motors, Toyota, Honda, Mitsubishi, Nissan, all you guys out there for not killing the consumer, but with less vehicles, you could have raised the prices of all the new vehicles because to be honest, I'd like to buy a new car when I need one, not a used one. But used car prices are up almost 30% this year. So, and that's because you just can't get the new cars, and they're just making the new cars that they want to make, maybe not the ones that people want to buy. You see, transportation services up 11%. Okay, well, transportation usually relies on, I think I heard someone say it, gasoline, up 56%. So, I get it. I get that things are getting more expensive, but I think this is a self-inflicted wound right here. And I think there's a problem now, because I sold out of my energy stocks, because when the price of energy goes up this much, crazy things happen. We just start drilling like crazy. We have mergers and acquisitions. We have an overinvestment. It's such a different story than a year ago. And so, I don't know. So, inflation's up, but it's really concentrated, and these feel like self-inflicted wounds to me. So, this is not a monetary thing where, oh my God, the mystical, magical velocity of money is changing, and we're printing more money, and maybe the economy's not growing as fast. I don't think this is that. It's not a monetarist issue right now. I showed that last week. This is a supply shock issue. So let's keep going. I want to talk about one of the stocks that I was in this week. I bought it and sold it in 5 days. This is the weirdest thing, right? So I think I bought it on Monday. I bought it for $5.88. It was awesome. It's called Geo, Private Prisons. Personally, I like the business. They're a REIT. Capital intensive. By the way, you're going to notice a theme on this video. Politically not a very popular stock. Okay? Private prisons are out now. So in fact, there's an executive order banning the Justice Department from renewing any contracts with private prisons. So that's fine, right? So now what does the company do? They draw down their revolver, which means they borrowed all the money they could. They fill their wallet with cash. If we use the analogy of the wallet, right? So they went to the bank and they went to the credit card and they maxed out. Give me all the cash that I'm allowed to take out, okay? And then they stop paying their dividend. They're just like circling the wagons, right? So I like the stock. I think it's very undervalued, and I think it was a great investment, right? I was thinking maybe I'd make a couple of percent, whatever. Now, if we go back a year, you can see how the stock has just been on a ruthless decline. Not a huge decline. I mean, it was 12, right? Down to 6. It's fine, right? So, I bought it here, right, Monday. What's interesting is it became a pump and dump while I was in it, which was unbelievable. So, by the way, I've never been in the middle of a pump and dump. So, the stock went up to $10. You can see that. So I was so flabbergasted. Right there. Maybe I sold it there. Yeah, right there. So I was so flabbergasted that I went to the bank. I did some banking. I just didn't understand what was going on with this stock. Right? I'm not going to get it right. Fine. $10.20 right there. So I just couldn't do it. So I sold at $10.20. Wow. Made a ton of money. Right. Ring the bell. More cowbell. Right. Made a ton of money. But what's interesting about this stock is there was no reason for it to go up on Wednesday morning. There wasn't. And in fact, I screenshotted something here. Yeah, I'd never been involved in what they call a trade halt. So this stock halted. NASDAQ stopped the trading. So I'm sitting there and I'm watching it, and it stopped the trade. I've never been part of this. I tweeted. I couldn't believe it. Right up here. Right at like $10.25 or something. $10.25. Or $10.50. They just halted the trade. That's it. Done. You're out. No more trading. So I'm sitting there and I'm like, wow, this is great. I must be a really good investor. No, I'm not that good. But sometimes we get lucky. So, sold out. Now, to be honest, I still think it's a great stock at $6. I plan on getting back in. Seven's a little high for me, but I'll take it under consideration. So, just really interesting, right? And just to watch, be part of that, be part of like the meme stock excitement. And so, just wanted to share that with you that happened. And I was tweeting about the stock when I bought it, why I bought it, why I thought it was a good deal, and then all of a sudden, right, people picked up on it. So I think that's terrific. Thank you for such a great stock. The stocks I'm in now, just in the spirit of full transparency, because I don't want you to think that I'm pumping, right? What do I have here? I got 4 stocks. Stocks drift lower, which is not helpful. I got Satsuma Pharmaceuticals, migraines. So if you ever get a really bad migraine, you got to take a shot, either in your muscle, I hate that, or under the skin. You get a migraine, right? So you got a migraine, you're just going to lay in bed with the covers over your head and turn all the lights out and try to just let the blood vessels stop constricting. You're not thinking you're going to go to the doctor and get a shot. And the idea that you were going to shoot yourself, take an injection at home, is scary for most people. So Satsuma is coming up with a nasal administration, like Flonase. You shoot it up there. It's a one use. Tons of patents. They got 10 patents and applications. They got 1 patent that passed that I read. DHE is the drug of choice. If you eat the drug, it digests and it doesn't work. So you have to either inject it or nasal it. New formulation. So they had their phase 3 trials and they didn't meet all the requirements. They actually met the requirements in 3 hours, but not 2 hours. So now they're going to go back and try it again, see if they can show results in 2 hours after taking it. AKBA works on the kidneys, renal. So they've got a drug right now that's being sold in Japan, but is not legal to be sold, not FDA approved in the United States. But the FDA just gave them a new drug administration approval, and they've got an application in. And so AKBA is the kind of kidney renal drug maker, full service drug maker. There's nothing wrong with that stock. It's just down a lot, slow. Corbis is looking to help with immunodiseases, cancers, fibrosis. Argonist. They attack. They're attacking the things that cause you to have that response that helps cancer. And I don't understand all the technology behind Corbis. I'm still learning more, but wow, what a learning experience! And so, all 3 of these companies have enough cash to keep going. They're all research and development. And then AutoWeb is interesting. So we used to advertise on Google. And I remember we have a website. I can show it to you. It's on Weebly. So what happens? 1 1,000, 2 1,000. All right, so it took 2 seconds. Let's try this one. 1 1,000. Oh, that's pretty quick. 1 1,000, 2 1,000, 3. So what happens is it takes like 1, 2, 3 or more seconds, especially if you've never visited the page. And so that gets you a low Google quality score. So they charge you more for the advertising. And the customer looks and says, I don't know what the hell this is. I got pictures of animals. This is a stupid website. I don't want to buy anything. I don't even understand what I'm looking at, right? Oh, market questions, 2, 3. It's hard to read. This is a terrible website. You're going to get a low quality score. So if I advertise this, I've got to really work on quality. Where are people looking? Where are they clicking? Are they getting any value, right? And so this is hard. And so, but AutoWeb is working on that. In their last quarterly call, they talked about the work they're doing in the Google quality score, which to me just, it said that they know their business and they're working hard. And so I like it. And I think with the whole automotive thing, now's the time for them to double down and keep their costs low, focus on being the best automobile connector of buyers and sellers online. And then when things turn around, we start making more chips and selling more cars, their business is going to go through the roof. Very, very leveraged. And so I think they've got the skills and capabilities in a business that's like Google advertising or Microsoft advertising. Or Facebook advertising, LinkedIn, Twitter. It's a good business. And I like it. And the stock is, not that it's $2.86, but the whole company is pretty inexpensive. Now, they don't make a profit right now, and so you're betting on leverage in the future. It's execution risk. So the reason I brought this up is you look at it, and the stocks are all down, or three are down, one's flat, right? No one's perfect. So might have made a ton of money on Geo, actually sold AMS as well, which is a lesser of healthcare products, healthcare equipment, capital equipment. Made 12% in a month. That's not bad. And I'd rather have the cash, which I plopped right into Satsuma and Corbis and AKBA yesterday. So we'll take that. Just wanted to share what we're in, what we're looking at, what we're thinking about. I also just want to share, I don't know if anyone here uses TweetDeck, but I like it. I'm a big Twitter user. I tweet a lot. And this allows me to do searches on each of my stock tickers. So I've got Satsuma, the ticker, Satsuma, the name and the drug, Akibia, Corbis, Auto. Auto I gotta do twice because there's also a crypto named Auto. I thought it was called something else, but it's fine. And then I got my promoters. So I've got a whole series of Twitter handles that I've identified as being either bots or people that are just out to make money. They're just producing things that are more like for profit. So as an example, if I look at, let's see if I can find, here, best trading community with more executive chat rooms and even have their own app, join here. Well, that message I see all the time. Here, Theodore posted the same message. And on, and on, and on. So I find them. That way I know what the pumpers are pumping at this very minute. So right now, by the way, right now it's nighttime. Most of them are in Asia. Right now it's nighttime. And so you get a lot of this like giveaways where people are recharging their bot armies and they're trying to get more followers, get more likes, get more hearts, get more retweets, and get ready for the next day. And $20 giveaway for the next 90 minutes, right? Retweet and upvote the top post and send me proof. There it is. Done. Congratulations, you won. So somebody made $20. Great. So that's a whole business right there. We don't do that, but it's very interesting when you're looking at stocks to know what people are doing. So this week we attended a conference. Actually attended it in full, 3 days. It's a great conference. For those not in the field, could be a little boring. So it's the third annual Post-Quantum Cryptography Standardization Conference as held by NIST, the National Institute of Standards and Technologies. So it started with Dustin Moody, who's the project investigator. He's the lead for this. Actually, it started with Matt Scholl, who's the director. And then Dustin did the kickoff, right? Let's talk about it. And then we had different candidate updates. And then we'll have other candidate updates later in the session. And lots of stuff here. How do we verify? What about side attacks? And the standards right now are not hardened against side attacks. I showed that there's still a lot of work to do. Then there was a hardware session where they talked about things running on different hardware and what fits and what doesn't, and how you can maybe optimize with a little flash or with a little, like, what are your trade-offs to get the post-quantum cryptography code to be smaller to fit or slower to fit on a slow chip. But then what are your trade-offs? It could be more network congestion because your message sizes have to be larger. And then a lot more discussion on side channels. I mean, a lot of this, the math is very intense, and so you have to really, it's just hard for me personally. But you learn a lot. You see what's happening, right? And then there was different applications, different updates, which was helpful, right? This vehicle one, which one? Vehicle, no, it wasn't vehicle to vehicle. It was IoT, I think it was IoT. Not sure which one it was. But one of these was an automobile. So you have features in your automotive automobile. And I keep thinking of like Fast and Furious 5, where they shot the gun, which had a little electronic thing, and you could connect to the vehicle system, and you could turn off like the steering. Well, in this case, vehicles are having on-off features, not just the radio either. And so how do you connect into the vehicle? How do you implement post-quantum cryptography? And they did 3 of the 4 finalists. And the chip that would be in the vehicle. And could you implement PQC in the vehicle? And what were the challenges? I thought, what a great use case. I'd spend an extra $20 for a car that had PQC, crypto, security measures on the main bus of the automotive control system. Because I got a 68 Camaro. It doesn't even have a computer in it. It's mechanical. But the new cars that I drive, they got all kinds of computers. You'd hate to be driving by and have somebody hack it for you. And then there were some other candidate updates at the end. And so everyone's doing a great job. There's a ton of work on this going on. And if you're interested, there's a Slack channel. Although I'm pretty sure they're going to turn this off after the conference. And there's a mailing list that I keep up on. And so pretty active. The Q&A was active. You had the security part 1, hardware, apps, side channels, the candidate updates, security part 2. And then there were some discussions on implementation. How do you implement it? The thing that I heard was it's 10 years. So it's just scary to think it's going to take 10 years to rip and replace, but probably it does. And so just know there's a lot of people working on this. It's a big deal. And we're staying current because we want to consult the clients and we want to help. At least we're not the math guys, but we at least want to help you to understand what's going on. So what else I want to talk about? I want to show you some pictures. Pretty pictures. This shouldn't be that random, but I make it a little random. So FinViz is a website we really like. Thank you, FinViz. I'm constantly tweeting and saying thank you, FinViz, for the data they provide. Nice job. So this is Geo, and you can see how it's relentlessly fallen, and then boom, with really no warning, it popped. Then it came down, and it's like $7 and change right now. So you can look at any stock. Any stock. So let's take a look at my favorite, my largest holding, Satsuma. So Satsuma's been flat as a pancake, except for some motion there in September. Basically, this is when the phase 3 trial didn't go so well. The stock has dropped. And so you can see the stock floated around 4, came up to around 6. Now it's floating around 5. And we've loaded up at around 530. So 528, 530. Just, I can't seem to buy enough volume when it dips down. I think the lowest I paid was 506. Today it was actually down to 485. You're going to see some other stuff here too. AKBA, flat as a pancake. Look at that. Range bound. So I don't know if it's good or not, right? But between $3 and $4, or $3 and $3.50, the stock is it's been floating around, right? And they've actually got a drug thing in there. There's rumors for AKBA, but there's no facts. CRBP, Corbis. Same thing, fell through the floor. And then boom. So, why did this fall? Why did it hit $1.36? So, one of the things I'm going to talk about is the benefits of the chat rooms. So, there's a lot of chat rooms out there, and on stocks, and chat rooms aren't just to meet people and date, but they're actually to learn about stocks. You have to kind of look beyond the memes. They're doing the Disco Inferno there. I don't know what's going on. There's a lot of crap, right? But then every once in a while you see something good. And so Double Fudge. All right, apes, buckle up for a wild ride. But really what happened was Double Fudge pointed something out to me that I had forgotten. Course is planning to increase this company's authorized share of common stock from 150 million to 300 million. And it didn't pass. It didn't pass. 85% of the voters said yes, but not enough voters voted in the proxy. So we got a little relief, but the stock fell through the floor because let's talk about what this means. At 150 million bucks, 150 million shares, at $2 a share, they could raise $300 million. Now, the company's got a little cash hoard, not a ton. They got some money. And that money could keep them rolling for probably another year. Maybe another year and a half without fundraising. But once they can issue 300 million shares, there's nothing that stops them from, like, tomorrow morning, from just saying, oh, here it is. What are we trading at? We're at $2.17. Well, now there's twice as many shares. We just sold them, right? And now the stock goes down to $1.08. Well, that's why the stock dropped earlier here, because this is when the vote was. It closed at $1.39. Now before, the stock was at like $1.88, and it just came down. So people got the proxy statement, they understood. If you go back a little bit, this was a $2.30 stock, and before that, this was a $3 stock. And so it's logical and rational that the stock would have dropped if people thought that you're going to have 50% dilution. Now, don't get me wrong. I don't think people have forgotten about the dilution. The stock has gone up now, assuming the dilution. Well, what if you didn't know this? What if you just picked a stock because you liked the letters? They were yours and your significant other's initials, right? And you just bought. You didn't know. You feel like a fool, right? So I learned that from a chat room. That's good, right? And so I would say you kind of have to do that level of research when you're into your stocks. And so I just find it interesting. There's always logic and reason behind the movement of a stock. And then we look at auto. And auto is crazy. I have no idea why it would bounce up and down and 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 up and down. I don't get it. In fact, if I'm... by the way, FinViz, guys, you probably need to take your purple line and move it a little bit because we're above the purple line. I know that you mean that to be bullish, but I'm not sure. But now it's above. It's above everything but the 200-day moving average, simple moving average. It's above the 50 and it's above the 20-day moving average. So stock's lifted up a bit. I think other people must have picked it up on the earnings call, that they're focusing on the right things. I don't need to hear you tell me about the mission and vision of the company. What I need to hear you tell me is how you're going to do better search and better connection of people. And in fact, there was some news on auto with Credit IQ, retail-ready capabilities. Right? They're a software and services company that enables dealers to provide seamless digital retail experiences to consumers and access to their retail ready. They can calculate car payments. on a vehicle of interest. So it's nice because if you could figure out, well, I'm going to pay 6% interest and that's $212 a month, I can afford that car. So now I call a car dealer with confidence. I'm ready to buy this car. I think you should be able to lease it to me at $212 a month. Well, how do you come up with that, Mr. Cohen? Well, I went on to Credit IQ. I know you guys use AutoWeb, and between the two of them, I figured out that this is the car, this is the MSRP, and if I finance the MSRP, this is what the cost should be. Oh, well, that's terrific. In fact, we could do a little better than that because we've got some rebates and we've got some special deals. Your friends and family, whatever, and I can get you in for $195. Oh, that's terrific. Sign me up. Let's get the car. Drive it home today, right? This is a nice capability. This is focus on a capability that actually makes your life better buying a car. So keep it up, AutoWeb. I don't care. I don't need to know that you're in Bitcoin and you're crypto and all that stuff. Just do a good job doing digital marketing for automobiles. And by the way, the auto guys, if you're listening, the price of used cars is up like 28% this year. So make sure that you got a used car offering. I know you do. But the dealers are going to make some money on the used cars. So jump on in there. All right. Just want to share that with you. That's one of the ways to use FinViz. So let's take a look at the market. What's going on with the market? Right? 1 day performance. Nah. Well, I guess we could look at 1 day performance. I tweeted on this earlier. It's painful. If you're in the restaurant business, you love today because today restaurants, apparel, consumer cyclicals are doing well. Cyclicals are doing well. Healthcare's red. The only thing that's not red is Mettler Toledo International, Hologic, and Cigna. By the way, I love Cigna. It used to be a client of mine years ago. But if you're in biotech, you're crying right now. Drug manufacturing, it's not a good day. If you're Biogen, if you're Eli Lilly, you're hurting right now. Now, banks, financial services looks good. So it looks like the money guys are healthy. Semi's mixed. Information systems are mixed. Entertainment, a little bit green. It's nice. But really, it's about restaurants. We must be hungry. It's Friday. So I'll go out, right? With the pandemic ending, people getting vaccinated in the United States at least, people are figuring, let's hit the cyclicals, let's hit the restaurants. I mean, it makes sense. Last night, I took the family out to a restaurant. I told the guy behind the counter, it was the same guy, right? He said, I haven't been here since before the pandemic. And he's like, Jeff, welcome back. Thank you for coming back. So they probably had a PPP loan and kept some people on and did deliveries. And but it was nice to be back. It was nice to be able to sit down at a restaurant. So I get it why that's up, but real estate investment trusts, they're in the toilet. Utilities are down. Materials are down. So it's very mixed today. But if we look for the week, totally different story, right? For the week, consumer cyclicals are up a lot. Communication services are up. Healthcare is up, with the exception of healthcare insurance plans. The financial service companies are down. Tech's way up. Look at real estate investment trusts are through the roof. And so you have to ask yourself the question, why is this market rotating so quickly? How come for the week, restaurants mixed, but Friday doing great? How come energy looks good for the week, but today was red? So I don't understand exactly. So there's a lot of fast money rotation going on in the market. I think that's where I want you to think about it, right? So if it's a solid kind of buy and hold market, you would expect things to be pretty consistent. There's not a lot of consistency here. And so you got to be able to kind of duck and weave. So I have a workout metaphor, right? Good form matters. So good form means you buy, you sell and take profits, you sell and cut your losses, you move, you look for the opportunities, the liquidity in the market, and you try to make some money. I also want to show you the world. And so China's the big stocks in China are down. Small stocks are mixed. Europe looks mixed to up. Canada's mixed. Mexico looks solid. Something must have happened there. That's probably something to take a note on and look at for next week. Mexico's up, Brazil's up. I thought there was some kind of a political unrest in Mexico. Maybe that got resolved. And Australia's pretty weak, except for Atlassian. I'm not sure what they do. So Israel's pretty green. It's nice to see. Denmark, but South Africa's red. So pretty mixed around the world too. There's no easy lunch today. So what I would say is, if you have money, you got to pick your bets. You have to be a little more thoughtful now than just get in and make money anywhere, right? So I showed you the stocks that I looked at before, but now I want to show you a 6-month chart on the 4 stocks that I hold. And I want to talk a little bit about what I see in the charts. Now, I'm not a chartist and I'm not technical, but I've read a book on it and I've been thinking about it. First off, gosh, my stocks are down. I hate to see that. I lost money today. Not happy. So, but if I look at today, pretty flat. So what I'm looking for is a shoulder, a head, a shoulder, a collapse through the neck. So we've had a reversal. Satsuma reversed in February to March. But now we're in April, pretty flat. And what it looks like here is it dropped, reverse shoulder, dropped a little more. And it looks like now it's testing. Testing. Now, today doesn't really count, but at some point we're going to see a test, maybe see a test. And if there's capitulation, wait a minute. There's no way 579,000 shares traded. This stock trades like 50,000 shares a day. All right, a lot of volume. If this is a capitulation, totally psyched. Do you know why? Because after it capitulates and after everyone has sold and wants to sell, it goes up again. Right? It's like I drop, then I recover a little on some weak volume, and then I sell with some strength in the volume. You can see a little bit of volume there. I'm selling, I hit the bottom on no volume. Then I'm up, no volume. Then I'm going to come down again today on volume. So I'm down 6 cents on 10 times the volume. So you know what? I wish I had a few more dollars. I'm pretty much tapped out. I still may buy a few, but it's capitulating. It's great. So dump all you guys want. Because if it drops down, then the odds are it's going to shoot back up again, right? The paper hands are out. Let's look at Akebia. I like Akebia. I think they do good research, right? So here, tried to go up. It's kind of flattened out, right? Came back down. So it looks like maybe there was a rumor. I've been hearing rumors, but they're not substantiated, so I don't like it. I'm not going to repeat it, right? And now you're down in this range again from 3 to 350. 3 to 350, right? So it comes down here. Actually, it didn't close. There it is. It closed at 306. That's the low over here, right? Then it comes down, low volume, and it closed at 283. Then it closed here at 290, and that sure looks like a little tiny head and shoulders, reverse. And then it comes back up, which is great. Looks like now it's trying to go up again. So I think Akebia has got a strong chart. Who knows? But it looks good, right? Auto. Same thing. But this one, over 6 months, it starts. So it went up, came down, up, down, up, down. So it looks like it's been testing this 235 level, right? Here the drop is 241, 235, and there's no right shoulder. There's no head and shoulder here. It's just market came down a bit here on some pretty high volume, although not a ton, right? 291, 235. So the volume is maybe 1 million shares over the whole time. Now we're popping back up again on light volume. So this, to me, there's no commitment here. There's no volume. Okay. Let's look at Corbis. I sure hope I see something better here, because this, to me, is actually a pretty ugly chart. I don't like it. So if we go back to you go back to December, right? I think it was pretty flat. $1.30, $1.25. I should have bought it at $1.25, right? Climbs up from $1.25 and it closed at a high of 341. So there must have been some good news. Maybe someone thought some of the phase 3 or phase 2 results were pretty strong. And then it comes right back down again. Right back down again to $1.86. So what's interesting here is it pops up to like under 250. Back down, 172. So here's where, remember what I told you, right? 250 kind of a stock, 225. And then there's that proxy statement. Hey, let's vote on doubling the shares. Well, the minute you do that, you're down to 139. Didn't pass, back up to 167. And since then, maybe people think that it's not going to happen. We're not going to dilute. Just so interesting, right? You gotta keep on top of all this stuff. And so those are the stocks I have right now. And for 3 of them in the biotech fields, it really depends on their research. So in a way, I'm betting on companies that want to help people. And after COVID, my expectation is after COVID, once the restaurants get full, people sitting at the restaurant are complaining. My arm hurts. I got gout. I'm tired all the time. Honey, I need to see a doctor. I have headaches. My back hurts. My arms hurt. I can't go to the bathroom. Honey, I can't go to the bathroom. Go to the doctor. Get it looked at. Next thing you know, there's kidney issues. There's migraine issues. There's cancer issues. People don't go to the doctor for a checkup when there's COVID. But now they're going to be getting their x-rays and finding out there's cancer, there's issues. And so, not that I want any of that for anyone, but it's going to pick up healthcare. That's what I see. I'll shut these down. What else I want to show you? Well, one of the first things I want to show you, interestingly enough, is Rolls-Royce, right? I can't afford a Rolls-Royce, but I can afford a share of Rolls-Royce stock for $1.62. I've been looking at the stock for a long time, and there's a reason why I'm bringing this up. So Rolls-Royce is interesting because it's a defense contractor. It's not the people that make the cars, right? These are the people that make the engines, the airplane parts. They do the repairs and maintenance. This is what powers Europe's Air Force and a lot of commercial airliners as well. And so $13.2 billion gets you a defense contractor. That's pretty good. Look at this thing. This thing was traditionally a $10 stock. $1.62. Now, I don't normally like to go over the counter, so I can't buy the stock, but maybe you can. Maybe you don't care. But I thought this was interesting. Anita Frew is the new chair. This is amazing. It's effective October 1st. She's the first woman to chair the British Aero Engine Company ever. So I love it. Here's a woman who broke through the glass ceiling and is running a defense contractor, and I love to see it. So I want to bring it up to you. If you got a few shekels and you want to put them in a Rolls Royce to show that you're just supportive of women executive roles, I think this is great. And I still don't know if this company's going to go bankrupt or not. They're in really big financial trouble, but maybe Anita can pull them out of the fire pit there. So that's Rolls Royce. Crypto. So this one's really interesting because, I follow crypto. I do not own any crypto. I do not recommend crypto. I don't analyze crypto. But I look at it because it's important, right? And so Bitcoin's at 36.8. So if you look at the 52-week range, it's right in the middle. So it's gone up. It's come back. Ethereum is in the same place. And now you got questions about where are you, right? If you're in Polkadot, you're way at the top end. I don't know about you, but I'd love a coin called a polka dot. There's a hex. I thought that's something you put on someone is a hex. Or is it maybe hexadecimal? I don't know. And there's a Dogecoin, or as I like to call it, doggy coin, at 32. So these things are obviously floating back and forth. Uniswap is at the low for 52 weeks, but my guess is it just hasn't traded long enough. I've barely even heard of it. You can see all these coins now, right? All these alternative currencies. And I guess the reason that you invest in an alternative currency is like Matic Network USD. First off, I've never even heard of it, so it's not a statement that it's good. But within the past year, it was 2 cents. It was a high at $2.68. It's $1.30. So if you would have bought $100 at 2 cents, you made a lot of money right now. The fact is, these things have a massive amount of range, right? This is less than a penny, Dogecoin. I think it only hit a penny in January 28th, if I remember. And it's, just tons of money, right? You buy it for like a quarter of a cent and it goes up to 30 cents. You're making a lot of money. So, but I think this is interesting. I think you ought to just stay close and understand this. The reason that we're following Bitcoin now is that there's a stock that was picked number 1 by our model, Marathon Digital Holdings, and they make Bitcoin. So our model picked this. If you were a customer of ours, we would have told you for the past couple of weeks to jump into Marathon. You probably wouldn't have done it because we don't want to invest in a Bitcoin company. That sounds very new age and newfangled. And if you can afford our services, you probably don't have a lot of money. I mean, you probably have a lot of money and you want to protect it, right? So we started recommending the stock probably in the 21s, 22s, right? And so you would have bought it. You would have been like, oh, Jeff, man, this is crap. Look at this, 20, 18, 20, 19, 20. This is about when we started recommending it. And we've been recommending it pretty consistently, even, I don't know about this week, but last week. So, wow, this thing's gone up. You made a ton of money on Marathon if you bought it. But I believe that Marathon is a bet on Bitcoin. Okay. But what happened, if you look at it over the year, is Marathon flattened out. So it's flat here. Of course, it went up. But it's been flat lately. And so what happens is the model likes it because it generally has a very nice beta. It's going up. But it's not so much up and down. It's up. And maybe it's quick down, and it's up again. Maybe a quick down and up again. So it's trending up. It's trending in the right direction. A lot of up days. And so Marathon looks like it's holding its value. There's a lot of support for it. And so if you're listening, you just picked up a tip. As of last week, we liked Marathon. The model picked it, is what I mean to say. Let's talk about interest rates. I tweeted on this earlier this week. We're at 1.4. Let me refresh so you get a brand new number right there. 1.457. So you should be saying to me, Jeff, this is very strange because inflation, remember I even drew this chart. I said it's flat. It's no longer flat. Right? This was the regression line we did on the 20th of May, and I said it's flat. So it continued to be flat all the way to June 3rd. But now it's definitely in decline. It's in a secular decline, structural decline. Interest rates are declining, although if you go back far enough, they're flat as of February 24th. And so you may not believe this last little drop. So now you're looking at 3 to 4 months of flat interest rates at the 10-year bond, U.S. government treasuries. So I bring this up because we have inflation, real inflation, monetarily driven inflation. And if we have the U.S. government tightening the screws on the economy to try to slow things down, tightening so that housing prices don't get out of control, tightening so that stocks don't get out of control, tightening so that too many jobs aren't created, then you would see it go up. There was a lot of fear in January and February, right? The interest rates are going to go through the roof because there was a little bit of a tightening. To be honest, it was. It was looking a little crazy, right? And this is market driven, not government driven, right? There was a feeling like we're going to tighten. We went from 1% to 1.5%. It's a 50% increase in 10-year yields. That's significant, right? So now it flattens out. There's no longer that sense that we're tightening. In fact, to me, this feels like a capitulation that says, you know what, Jeff, we're not tightening. We're probably good for a while. I believe the Federal Reserve Bank is going to let us continue to play ball. That's so interesting to me because easy money, at least stable easy money, is good for the stock market. Now we're going to look at crude oil. And to be honest, I don't understand the chart. I'm doing a 6-month chart here. Because this is not a flat market. I go back to April. I go back to March. There's no flat at all. Look at this thing. Oil's been in an upward curve since $50, since 2020. Oil's up. Oil's up, up. And so if we look at it during the period of this administration, it's up. It's actually less steep. Maybe people were worried that President Biden was going to take office. And so the thing's not going to go up forever, right? There's a price to drill and extract a barrel of oil, and it is less than $71. And so you have $71 oil, U.S., New York delivery, you're just going to increase production. And by the way, you got to keep the pipelines rolling. You got to keep making the pipelines. Please don't stop the pipelines. And so this is what we got. We got oil going up. And so I get nervous about this because we could see $100 crude oil. But all you're going to see then is excesses in the market, which are rational at the time, but it's not rational because we know over time, oil does not keep going up. Over time, how far do I have to draw this chart? 5 years it's flat? Let's see how long it's flat. So the price of oil has been flat since 2014. It's been up and down. Don't do it, guys. Don't overinvest. The price of oil has been flat since 2002. Yeah, you get excesses like you did in 2008, but then you get the correction in 2009, and you get the excesses here like you did in 11, and you get the drop in 15, 16, 17, 18. Come on. Just chill out. Cool your jets. And for all you individual investors out there, do not just assume that oil is always going to be through the roof. It's secularly flat. It's a commodity that you take out of the ground. There's a certain cost to doing it. By the way, fracking has reduced that cost, so reduce the break even. And it's just the way it is. All right, let's take a look at the S&P. Last time we looked at this, it was flat. Flat as a pancake. Let's go 6 months. It was slightly rising. That's true, slightly rising. So in fact, the S&P has kept its trajectory. It is upwardly moving. There's no flat. There's no flat. So the S&P keeps going up. This is great news for the market. So now I want to talk about globally. If we look at the 52-week, I'm going to really zoom in here. I know the punchline, by the way. So this is your 52-week range. You're going to notice if it's over to the right, it means that it's at a 52-week high. So it's up and it's been up. So this one right here is at the low. right? But if you look at the 52-week range, it's within, what's that, 5%? It's Egypt. So not a lot of movement in Egypt. You get some where it's in the middle, which is fine, Latin America, Central America. Again, a little bit more in the middle. Korea, New Zealand. The VIX is at the low. So there's no fear in the United States, in the markets. There's no volatility fear. People are not worried. People are not buying puts to protect themselves. I mean, they are, but not nearly as much as they used to. So I'm looking here for the Turkish index, and I'm not finding it. Which, as you know, I'm working on Turkey. So BIST 100. Unfortunately, I can't show the BIST over time. It doesn't allow me. It doesn't allow me to show it over time. It's very frustrating. It allows me to show year to date. So you see the BIST is pretty flat. It was 1495. It's 1460. Can I go longer? Or I can. I don't believe this number is 1460. Oh, you know what they did? They took 2 zeros off to deal with the currency. They reduced the BIST 100 by 100. So, that's weird, to be honest with you. So, it's not moving as much. But you see it was a nice upward climb. So what's been happening, though, is when the Turkish market is pretty flat, reduces expected gains. So what I was trying to say there is you got to, in the markets, you've got a general bias towards almost all international markets except Egypt and Turkey are at all-time highs. Now let's look at the Forex. Where are we? 52-week range. Euros, $1.21, right? It's still pretty high for the year, but it's down. A lot of currencies are up, but some are down. Great British Pound is down, and you can see it. Canadian dollar is down. It's was that like 60 cents, 55, 60 cents. It's not great. So currencies are mixed, so you don't see the same reserve currency kind of discussion. And we talked a bit about bonds. And so at the 30-year, you're at 2.156, which 2.15, I'm sorry. So you're not quite at the 52-week high, but you're definitely off the lows. The 10-year, you're still towards the high end, but you've come back quite a bit. For the 5-year, it's a lot tighter of a range, but you're still a little bit high. At the 13-week, you're pretty much at zero. So why is this important? You're at 1.5 hundredths of a percentage point. So the U.S. government has kept it loose. It looks like they're going to keep it loose. In fact, they brought it looser. There's only 3 of these moves left. And then you're at zero. So 13-week treasuries are just cheaper than dirt. You're basically giving the money to the government for free to hold for you. The only reason you do that is if you have so much money that you don't trust the FDIC risk and you don't trust banks. Those damn banks, I can't trust them, so I'm going to give my money to the government because they have a reserve currency and they won't go bankrupt. Fine. But other than those people with that much money, for the regular person, these rates are too low. They're too low to play in. What, you're going to lend the money out for 1.5% a year for 10 years? I don't think so. So, last thing I want to show you is that we're starting to test our model. We're starting to kind of put our money where our mouth is. So not only am I investing in stocks that the model is picking, but we got a Medium article. So we ran a run May 18th. After a week, we published the results. We then updated it after 9 trading days, and we updated it just today after 17 trading days. So let me explain what you're seeing. What you're seeing is we pick some stocks. We pick these stocks. It's no big deal. We pick these stocks. And if you would have bought them all equally, 10 stocks, 10% of your money. So if you were going to invest $1,000, you'd have put $100 in each. Over that time period, and was using the SPDR, the SPY, which is the ETF for the S&P 500. So if you also could have invested $1,000 or would have invested $1,000 in the SPDR. Okay, so you did that. The SPDR earned you 4%. This is all net of commissions, taxes, fees, and also net of dividends paid, because there may have been dividends paid. SPDR's up 4%. That's terrific. Making money, right? Your 401k loves you. But the 10 stocks, they're up 15.6%. In fact, 8 of the 10 stocks are up if you would have bought them at the May 19th open, as of like an hour ago. That's a big deal, right? 8 out of 10 stocks are up. And the average for the index, the average for those 10 stocks is up 15.6%. So we do a simple alpha calculation. We say, you got your money, you could have put it in the SPDR, or you could have put it in these 10 stocks. If you had $1,000, you would have made $156 on one, $40 on the other. So that's $116 on 1,000, or 11.6% alpha creation from the Chicago Quantum Net Score. And this isn't even the best way to use it, but because you're all not paying clients, I'm not sharing with you the truly secret sauce, which is that if you hold these stocks in certain combinations, you get the gains, but the stocks move up and down in complementary ways, so you offset the losses. So you'll never really have that bad of a day. Unlike the portfolio I'm holding now, which is 3, biotechs and an information service company, they all go up and down together. Here, the model actually picks stocks that go up and down complementary to each other so that you reduce your portfolio risk. So let's take a look. Net, your alpha was 11.6% after 17 trading days. 8 of the 10 outperformed the S&P during the 17 days. And if you would have invested $1,000, you would have earned $156 versus $40. We like it. We run it, and now we're investing on it. And so, hope you appreciate that we're sticking our neck out there, and we're creating ways to track the results. Now, there is one stock that we're not quite as proud of. So I like to share with you that not every pick's a winner. CEI, Camber Energy. On April 30th, we just ran the Amex, New York Stock Exchange American, which is like 150 stocks. And CEI was picked as the best one of those. So we called it at 73 cents a share. It is now 69 cents a share. It's down 5.5%. So if somebody would have invested in CEI based on just the model picking it, they'd be down 5.5%. Now, what we did is we did our due diligence and our research on the picks, because we're not just going to blindly invest. And we found out that Camber Energy had gotten rid of all its operating assets. It had no revenue and no income, but it had borrowed $20 million. So I was thinking to myself, pizza, private jet rides, what's $20 million going to get you when you have no business to run? There's a lot of things you can buy with $20 million of shareholder money. And I guess they also could buy another company, but it's hard to buy another company for $20 million. It's not a lot of money. So my guess is it's late night pizzas. It's a beautiful office. It's a private jet to go visit your the operations that you sold. And so I told the world, do not invest in CEI. So I guess I'll take credit for the 5.5% drop versus 4% increase in SPDR. But that was just because of due diligence, not the model. So, all right. Let's save it. Close it up. I think I got a few more things to show you. Not a ton. Not a ton. Let me take a look. So there's always something interesting. So what I'm showing you here is a screen print I took of iBorrow. So iBorrow is like a toy website that looks at how many shares are available. If you hit the button in Interactive Brokers and say, I want to short the stock. And in this case, the last time I looked, which was the 9th, it was 2 days ago, it was 9,000 shares. So at a $5 stock at 9,000 shares, it's $45,000 you can short. So in other words, there's not going to be much shorting pressure on this stock. Now if we look, it was maybe a week ago, it was 350,000. So either people are shorting it or people are moving it into a cash account. I don't know. I don't know why you can't short it, but I think it's interesting that you know how to do this homework. So you go to iborrowdesk.com. You type in your ticker, Satsuma. And you take a look. And now you see it's even worse, or better, depending on your point of view. So today, right now, because it's updated every 15 minutes, you can borrow 7,000 shares. At $5, $35,000, not a lot of money you can short this thing. And so it's interesting. The number was as low as 2,000. So what that tells me is there's not a lot of stocks out there to play with. So if a motivated buyer reads my tweets, let's take a look. What tweets are we talking about? Let's go to Stock Twits. Let's go to Let's go to STSA. And somebody says, hey, just bought more. Hey, price seems low. Buy the whole company for $35 million, right? That guy lied. And in return of that, or false statement, I published a document on insider ownership. Insider ownership is 86.2% based on my own research, on publicly available information, but a lot of research. I was digging all over the Securities and Exchange Commission websites, all the filings, all the websites, everything I could find. I even went into their $80 million raise, and I was able to get the people that bought the stock during the private secondary placement. And of the 86.2, 3.5% are owned by executives. That assumes that... never remember his name. It's like Takashita-san, who's a board member. He owns a company, Shin Nippon. So do you count it for him or do you count it for the institutional? I don't know. But whatever. So it's 86.2. I talked about how they have enough money, enough liquidity to ride out the next phase 3 into NDA or to fail as a business. I'm buying longs, right? So it was funny because I posted it at 548. It's now 517. So there it is. So a lot of postings, right? And so people are excited. Now, today, I guess somebody said that there's some volume on the stock. But you look at the pricing, you don't see it. You just see it's a dog right now. Let's see if it's still a dog. Go to Yahoo Finance, STSA. But the reason I say this is it's possible that this thing's being primed for a run because there is some short interest. It's about 770,000 shares are short. There's obviously not a lot of shares left to short. And it doesn't take a lot to move this. And what I want to share with you is the same thing I saw earlier, right? So if you look at it over 6 months, you get a whole story to tell, right? But let's look 5 days. And if you look at it over 5 days, it made a real attempted climb here to 550. That was great. I was like, oh my God, this is terrific, right? I want to be in. And all no volume. Low volume. In fact, let's see if I can do the MACD on it. Just not. I mean, there was some accumulation, though. There was, right? But it's really not been a lot of movement here. I bet if I did the RSI score, it'd be tiny. RSI is from 80 to 20. I'll even do 75, 25. Yeah, we're not even outside of those bounds. We're at 50 right now, so we're right dead square in the middle of relative strength. But for some reason, at this moment, at 10:20 in the morning, Eastern, 532,000 shares changed hands at effectively a small change of the price, 35 cents. So let's take a look if we can see that at 1 minute intervals. So somebody swapped out a position, a big position, and the stock keeps trading like nothing happened. What this is saying is that it was a blip. It was a volume blip. Don't understand. Maybe they waited until the stock kind of looked good, 225, 227, 226, and then dropped 500,000 shares. So it's always interesting, right? Now you want to know what happened and all that. So, but a good part of the story is to look at iBorrow, and so this is how we find out if shares are able to be borrowed and shorted. So I want to thank you very much for listening. It's week 23. It's been a good week. It's been a hard week for us. We've done a lot of work, and we've been to conferences and stuff. So if you like it, please check out our website. I'm not going to ask you to buy an analysis, but if you want to buy an analysis, you can call. I can tell you all about it, right? You could spend $150 and you can give us your tickers. Jeff, I'd like to go long. I'm sorry. I set the mouse real sensitive. Jeff, I want you to look at whole exchanges. I don't have tickers. Just do it all. Look at 4,600 stocks. Tell me what you got. It's $1,000. Or Jeff, I'll give you some tickers. Tell me the stocks to get rid of. Tell me the dogs. Or I'll give you whole exchanges that I want you to look at, or even up to the 4,600, and you can pick the dogs. For $7,500 a week, I'll work on a run specific to you. By the way, we're doing this for Turkey, and unfortunately, I forgot to mention the 7,500. So I did all the work. I built a custom run for Turkey, and we own it now. So now I'm becoming like the expert on Turkish stocks. But you can have it if you wanted it too. That'd be nice, you know. And then, but then you got to run it too. That's not so easy. And then for $100, you can spend 30 minutes. We could talk. So probably the best way to do it is, Jeff, I think the market's too high. Let me give you 100 tickers, even 150, whatever. But if you give me under 119, I can run them on the D wave. So, and that's cool because then you get a real quantum pick, and the quantum picks are different. GAS was up due to the cyber ransom attack on the pipeline. Okay. Thanks, John. And then the other thing to look at is, and thank you very much, actually, you're a friend. So we own the Turkish thing now, which is helpful. That's actually been really interesting. I was going to talk to you about what we found, but I'm going to wait. And let me see if I have anything else I wanted to share. No, that's good. So we'll just wrap it up now. Have a great week. You guys take care now. Bye-bye.